Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu. We've got longtime fools Dan Caplinger and Jim Gillies giving a 1 to 10 rating to convenience store owner Alimentation Couche-Tard. Yeah, I can't pronounce it well, but its ticker, it's on the Toronto Exchange. It's ATD. Talk about the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Jim, both of you have 8s.
Yeah, I mean, first off, your pronunciation, we'll give you a solid 8 for pronunciation as well there. Look, it's a convenience store roll up essentially that's been built since I think it was founded around 1980. Convenience store roll up globally, run out of Quebec, Canada. And there are alternatives to convenience stores. Now, I mean, you probably know that most people don't know who Couche-Tard is, but you probably know the Circle K brand, and especially as they largely consolidated a lot of the roll-ups they did under that brand. So if you see Circle K, you are dealing with Alimentation Couche-Tard. Their business has been, the business is convenience stores, but I would suggest that the strategy, the model, has been the acquisition of convenience stores, and it has been built. It has been a juggernaut for 4 decades. Flowers don't, however, grow to the sky, and the problem is the last couple of deals they've tried to make haven't gone terribly well. They went after French grocery/convenience store chain Carrefour in 2021, got rebuffed there. We think they just wanted a flight to France and go hang out in France for a week or two, but whatever. And then most recently, they've been trying to acquire 7-Eleven from the Japanese parent 7 & I. That looks like it's also not going to play through. So, my takeaway is I think we might have reached peak Couche-Tard.
I gave it an 8 as well. Convenience stores, they're ubiquitous. They have an audience everywhere that they are. They woo consumers for a number of really good reasons. They often are able to charge prices that are well above what you would pay for the same goods at a grocery store or something else like that. Couche-Tard in particular, good diversification across geographies with some exposure in the U.S. market, as well as certain markets in Europe. That justifies the 8 for me.
And yes, we will have an Alimentation Couche-Tard pronunciation off between Dan, Jim, and Tyler Crow, who also loves to pronounce it. But for now, we'll go to management. A 10 is Warren Buffett. A 1 is Homer Simpson. Dan's at a 7. Jim, you're at a 9.
I am, and I will admit I'm probably grading on a curve. I'm just looking at how management built this business from basically nothing during my lifetime. I think the founder, Alain Bouchard, started the business, I think in, like I said, 1980, from a single store. And has just been relentless in growing the business via acquisition. Until recently, Bouchard was still in charge. He's still there as executive chairman, but Alex Miller has been brought up only in the last year or so, I think. But the other co-founders remain on the board. This has been a long-term management success story, and I think they've got some pretty deep bench strength as well.
Yeah, I think my 7's a little bit more forward-looking. There's always questions when you're going through the founder-CEO transition, the extent to which former values get carried forward. As you pointed out, Miller hasn't been in the corner office for that long, but he does have over a dozen years of experience at the company. He also worked previously for petroleum company BP in their fuel supply area, and so he's got a lot of the knowledge that you would need to run convenience store operations. A lot of Couche-Tard locations having gas stations associated with them as well. So I give him a 7.
Financials, a 10 is a fortress, a 1 is yikes, 2 7s, Jim.
Yeah, I mean, it's been strong, consistent, unspectacular perhaps, but strong and consistent growth up and down the income statement, made a lot of cash flow. They generally use that cash flow in the service of shareholders via well-timed buybacks as well as dividends and raising dividends. They have repurchased about 1/6 of the company over the last 5-ish years, which has been pretty good. Debt, I think where I want to knock my financial score now a little bit, the debt's a little higher than I'd like. I'm not including operating leases here. I'm just strict kind of bank debt, which is what maybe saves it from being an 8 in my world.
Yeah, that debt, I mean, it's a natural consequence of the roll-up strategy. Expansion efforts have kept the sales growing, though, so that's a good side on that. Earnings growth, a little bit spottier, but Couche-Tard definitely no problem remaining consistently profitable, and the cash flow looks good. I gave it a 7 as well.
Dan, let's move on to valuation. How well will Couche-Tard stock do over the next 5 years? How safe is it? 10's a sure thing. 1's a lottery ticket.
Yeah, I gave it 5 to 10% returns. That's kind of my market standard at this point. Stock's done reasonably well, but we're going through a little bit of uncertainty. Jim kind of alluded to it up top. The inflection point that I see has to do with what happens with the 7&I negotiations, which have not been going terribly well. I'm not sure whether Couche-Tard really is planning to try to go hostile. I do think that the management has kind of opened the door to the negotiation process a little bit, which is kind of the feeler towards, okay, are we going to go hostile here? We're going to tell public shareholders what's going on behind the scenes. It's kind of unclear at this point. But anyway, I think a safety score of 5 kind of reflects that uncertainty. I'm not quite sure what the stock does if 7&I falls through entirely, or if they are able to save face with some kind of partial asset deal or something like that. Just not sure what the future is going to hold there.
Maybe they'll buy Kim's Convenience, but I think it's only a one-store operation.
That's only one store. Oh. That's a real store, by the way. Yeah, it's right downtown Toronto. So my 5-year return here, I'm actually going higher than Dan. I've got a safety score of 8. But I'm predicating it on what I think happens if 7&I does fall through. So 10 to 15%, just because management here has a really good long-term track record. Their 5 and 10-year track records are about roughly 12% CAGR before dividends. A 20-year CAGR, compounded annual growth rate, is closer to 17% before dividends. There is unappreciated pricing power in convenience stores, I think, or possibly I'm just old and remember chocolate bars should cost below $1, not over $3. But what is happening, at least here in Canada, with Circle K's, and I circulated a picture before the show, so I'll try to describe it here. But this is a run-of-the-mill Circle K about a half a mile from my daughter's high school. And not only is it a Circle K and a gas station, but there's also a Tim Hortons outlet in it. And remember, cannabis is legal in Canada, fools. And there is a pot store or sub-store within the store. So, there are the abilities to get all things to all people here. And I think that if they were to pursue, instead of doing the acquisitions that they're trying to do and empire building, if they were to switch to kind of a Home Depot story, which kind of went from growth story in about 2009, 2010 to cash cow story, I think Circle K could really be something special if they don't get 7-Eleven.
Jim really did put a picture in our notes with a Circle K, a Tim Hortons, and Fire and Flower is the brand of for the weed. Let's move on to top it. Everyone's favorite, Dan. Is there a company in Couche-Tard space that you like better?
The only convenience store I think of that's really generating this much buzz lately is Buc-ee's, which is not a publicly traded company. But yeah, everybody talks about Buc-ee's down in the South, and everybody wants a Buc-ee's here in the U.S. But no, I can't think of any public company that matches Alimentation Couche-Tard as in terms of publicly traded stock.
I'll give you one, Dan, and it's Murphy USA, which is ticker MUSA on the NYSE. It's very similar roll-ups. It's smaller than Alimentation Couche-Tard, but it's a roll-up. It's run by a good guy, and he's a good CEO. And also, they're what I like to call a cannibal stock. They buy back a lot of their own shares. So, but hey, you know what? You can own both quite happily.
Thank you to both Jim and to Dan. They've given Alimentation Couche-Tard a solid overall score of 7.2 out of 10, with strong scores for the business and management, but weaker scores for returns and safety. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up, I kid you not, is Dollarama. Till then, Fool on. Did I pronounce it right, Dan?
No.
Not even close?
Yeah, it's not close. It's all good.
Alimentation Couche-Tard.
Say the company one more time.
Alimentation Couche-Tard.
Alimentation Couche-Tard.